The longest economic expansion in American history has come to an end because we are officially in a recession, which isn't really breaking news, but there are some noteworthy things that you need to understand. What's up everybody, I am Jaspreet Singh and welcome to the Minority Mindset. A recession, technically speaking, is when you have 2 quarters or 6 months of consecutive economic slowdown. This pandemic and our economic crisis started in March, but the NBER, the National Bureau of Economic Research, came out and said that we are in a recession in record-breaking time. The NBER is a non-profit group that tracks the economic cycles in the United States. They said that our economy was hurt so bad in the first quarter that there's no point for them to wait for 6 months to declare that we were in a recession, which is something that they never do. Like during the 2008 crash, the NBER didn't say that we were in a recession until December 1st, 2008, which was after Bear Stearns collapsed, it was after Lehman Brothers collapsed, it was after the stock market crashed, and it was after Fannie Mae and Freddie Mac were both taken over by the United States government. The NBER went on to say, here, I'll pull it up for you. The unprecedented magnitude of the decline in employment and production and its broad reach across the entire economy warrants the designation of this episode as a recession, even if it turns out to be briefer than earlier contractions. In other words, even if this isn't a very long recession, we've never seen anything this bad before, so you're in a recession. Their thought process was, okay, 42 million Americans are out of a job, and major companies like JCPenney, J.Crew, and Hertz are all forced into bankruptcy, and this all happened within a matter of a couple months, so there's really no point for us to wait on this. This is a recession. But practically speaking, getting the recession label doesn't really mean much. I mean, the stock market had already crashed. We saw it fall more than 10,000 points. Tens of millions of Americans are out of a job. Getting the label recession doesn't really change anything. Everybody knew that we were in an economic slowdown. I mean, it's like the difference between finding out you're having a baby and coming up with a name for a baby. All they did was name our baby. Aw, I'm gonna call you Recession. What's more important than being labeled a recession is knowing how long we're gonna be in a recession and knowing how to use your money during a recession. Our recession is being fueled by 2 different things. One is this health issue, because this health issue is preventing our economy from getting better. And the second issue is a consumer issue because people don't have enough money. And YouTube is fueled by that thumbs up button below, so if you haven't hit that yet, make sure you do that. The health issue is obvious. Our economy was floating along, it had some issues, but it was still growing, and then this pandemic came out of nowhere, and it was like a needle that popped our balloon, and then our economy pretty much exploded because everything stopped. People were forced to stay inside, people were not allowed to go to work, and people were not allowed to go to the mall. It's a really weird thing to think about because this has never really happened before in our lifetimes, where the economy just stopped. Businesses stopped generating money and people stopped earning money. Money completely stopped flowing. That's when the government started printing trillions of dollars to pump the economy and keep it artificially going by throwing trillions of dollars into businesses to make sure they would keep running and to give people money to eat. But if you were struggling before this whole pandemic started, this pandemic was the straw that broke the camel's back. Companies like Hertz, JCPenney, J.Crew, and Whiting Petroleum almost immediately filed for bankruptcy. In May, things started to get better. The virus was going away and lockdowns were ending and people were back to living their lives almost like normal. And that's when Wall Street thought, if things are going back to normal, that means the stock market's gonna go back to where it was before this pandemic started, so I need to buy as many stocks as I can. It was absolutely insane. We went from breaking record lows in the stock market in April to breaking new record highs in the stock market in June. So like we were seeing the fastest stock market drop in April, and then in May and the early June, we saw the stock market grow faster than we've ever seen it grow in history. If you use this drop as a buying opportunity, you probably saw a huge surge in your stock prices because I know some of the stocks that I bought and funds that I bought during the drop grew by over 100% in just a couple of months. Now, investing has risks. You are never guaranteed to make money when you invest. You might even lose money, so make sure you do your own due diligence and don't just blindly listen to a random guy on YouTube. I bought gradually on the way down and then I sold gradually on the way up, But let's talk reality. This virus has not gone away. We are slowly starting to see cases of this virus start to trickle up again. And if that continues, that is not going to be good for the economy or the stock market. At this point, we are seeing another really big round of uncertainty because either we cannot see another wave of this virus, which would be great news because that means less people are going to get sick and the economy can recover, or we could see another wave of this virus, but states do not lock down again, which means people would be scared to go out and spend money, which means we could be in a recession for a very long time. Or we could see another wave of this virus, but states do lock down, and now our economy can risk going into a depression. Now, of course, your health is more important than anything else, and unfortunately, I don't really have much guidance as to what's going to happen next. So this is where there's a lot of uncertainty, and one thing that investors hate more than anything else is uncertainty. Like back in 2019, nobody would have ever guessed or predicted that it would be humanly possible for the United States economy to just stop or shut down, but it happened. What we do know, or at least I hope we know, is that our economy and economic issues cannot get better until we fix our health issues. And the problem is, lots of people think that, okay, if we just throw more money into the economy, it will fix itself. But it doesn't really work like that. Right now, we're just throwing money into a black hole because until the health issue goes away, the economy can't get fixed. So keep a close eye on what's going on with the virus and a vaccine, because if people are scared to go outside and spend money and shop and live their lives like normal, our economy will not be able to recover and we will be in a long recession. Before I go and talk about what's going on with consumers and the economy and the debt issue, if you are interested in staying up to date on what's happening in the top finance and business news, that way you can stay up to date on this type of stuff, well, that's why we created our free Minority Mindset newsletter, where our team first breaks down the top finance and business news, and then we show you how this news affects your wallet. That way you can be smart with your money. Our newsletter is completely free, and you can join our free finance and business newsletter by clicking the link up here or by clicking the link in the description below. By the way, our financial news emails are different from our financial education emails. I've mentioned this a few times now, but our economy runs on spending. When people spend more, people make more, and the economy grows. And guess what? People in America love spending money. Like the majority of Americans live paycheck to paycheck because most Americans are spending 100% of their paycheck plus some extra money with the help of their bank and debt to go and live a bigger life than they can actually afford. Now, I have a different philosophy on how you should spend your money. I mean, that's what I talk about a lot on our YouTube channel, so if you haven't subscribed yet, make sure you do that. But this is how our economy works. Normally, when we enter a recession, what happens is the Federal Reserve Bank will cut interest rates to make borrowing money cheaper. Because now, yeah, we are in a recession, but hey, you can get a mortgage on a brand new house for really, really cheap. So how about you go buy the house? And so now people are encouraged to go out and spend more money, and this stimulates the economy, and this can help get the United States or a country out of a recession. The problem with that is the Federal Reserve never really raised interest rates after the 2008 crash. And the Federal Reserve Bank started cutting interest rates in 2019 to stimulate and spur an already growing economy. So we didn't have much wiggle room in interest rates. Like in 2019, interest rates were already only at 1.5%. And so the Fed, when they cut it down to 0%, it wasn't that drastic of a change. When the Fed cut interest rates in the 2008 crash, it was really effective because before the 2008 crash, interest rates were at like 5%. And so when the Federal Reserve Bank cut interest rates to 0%, there was a margin that really stimulated the economy. Now in 2020, we went from cutting interest rates from 1.5% to 0%, so there's a much smaller buffer. That's why the Fed has been working so hard to print so much money, because that's their way of stimulating the economy, since they can't cut interest rates anymore unless they go negative with interest rates. When the Fed pumps money and prints money and shoves it into the economy and markets, this is great for the stock market because this makes the stock market rally, which makes stock market investors richer and wealthier, which helps these people spend money, which is really good news, except a lot of Americans don't own assets. Like, you were not benefited by the stock market rally unless you owned stocks. Not to mention the fact that if the stock market becomes reliant on the Federal Reserve Bank's checkbook and the Fed stops printing money at some point, this could cause the stock market to crash if the stock market is depending on this free money. So it's going to be interesting to see how the stimulus process works, because we've never printed money like we have now to pump up the valuation of assets. However, on the flip side, this isn't risk-free, because if the Fed prints too much money, then we risk hyperinflation where our dollars become worthless. However, as Americans, we are very lucky because the United States dollar is known as the world's currency, so hyperinflation is much less likely because of that, but it's still a risk. This hyperinflation is obviously a risk that a lot of investors are worried about, which is why you've seen so many investors move their cash from cash or stocks to gold and other commodities. Gold is known as a hedge against inflation because while the Federal Reserve Bank can just print $1 trillion an hour, you can't just print a whole bunch of gold. Like the value or cost of an ounce of gold reflects the time and effort and labor required to mine an ounce of gold, which is why gold is considered a hedge against inflation because there's intrinsic value in producing or mining that ounce of gold. The value of a dollar, on the other hand, depends on how many dollars there are, and it costs 12 cents to print a $100 bill, and it costs a millisecond of effort to produce it. Should you go out and dump your portfolio and take your bank account and just dump it all into gold? No, not if you believe in America. But every smart investor should own some commodities, gold, real estate, maybe even cryptocurrency as a way to protect you and hedge you against anything. Whatever you do, just be prepared for a very choppy 2020 because it is going to be a bumpy ride, and use the dips and downfalls as an opportunity to buy instead of panic selling. And if you are looking for an easy way to stay up to date on what's happening in the top finance and business news, remember I have the link to our free newsletter in the description below. Thank you for watching. If you enjoyed this video, share it with one friend, that way we can help spread the word. If you do want to learn more about our economy and the credit system and why we might be reaching the end of our long-term debt cycle, I already made a video on it, and you can watch this video on YouTube by clicking this button right over here. Thank you for watching, and as always, keep hustling.